Okay, sharp recovery for the indices, the large cap indices that is, but the mid caps still reeling under quite a bit of selling pressure with advanced decline of about 1:3. This is Closing Bell. I'm Anuj and with me today is Sonia. Hi Sonia, good afternoon.
Hi Anuj, good afternoon. So that's the story of the day, right? The sell-off that we've seen in the mid-caps. I mean, and that is a bit disconcerting because there's been no real recovery through the course of the day.
No, I think the mid-cap market has broken down for some time. It's not the first day that it's happened, Sonia. All through last month, the breadth was negative. And, the last month, the mid-cap index underperformed some 7%. And index itself underperformed, right? So in that sense, it was some time coming. I think what's happened today is that the markets just decided to sort of have a bit of a short covering pop in the last hour of trade, just to remove the weak shorts. This is a very weak market. Nobody should have any doubt about it. And advanced decline is a clear indication. But in the first hour itself, you had advanced decline of 1:4. You had everything bad thrown at the market. ADAG, DHFL, Vedanta, all these stuff. So perhaps the market did get oversold just in the near term. And that's why you've seen a bit of a recovery. The problem is that recoveries will be vulnerable to be sold into. So perhaps there was a trade at around noon time to just look for a second half recovery. That has played out. But honestly, it's not very convincing. This is a market which still remains a bit of a sell-on rally market till 11,000 is taken out. And really, the way mid-caps are collapsing is, something which is interesting. What has happened, though, is the market's given a very interesting dichotomy once again today. If you take a look at India Bulls housing, that's down 5%. Dewan housing, it's okay. I mean, you can have intraday recoveries. That's, meaningless. But India Bulls is down about, 5% right now. We've seen a bit of a decline in Piramal Enterprises. I think Yes Bank is once again collapsing. That stock is down about 3%. SBI is beginning to lose some ground. PSU banks are beginning to lose some ground. And look what's gaining ground once again for the last few days. Kotak Mahindra Bank, that's up another 1%. HDFC Bank, in fact, Kotak and HDFC Bank have really kept the bank Nifty in the green. So what has happened now is, once again, just like we saw it in last year, the money moving from a lot of these weak NBFCs and PSU banks into some of the stronger retail franchises, which is HDFC Bank and Kotak Mahindra Bank. To a certain extent, IndusInd Bank, but that has its own issues. I think that's one very important internal, that this is a market which is down but not out. It's beginning to shift money into some of these good quality stocks, which should be good news for the bulls. But the mid-cap performance clearly is very, very disheartening.
Yeah, I guess during times of risk aversion, which we are seeing currently, there is a general move towards quality stocks, right? And that's what's happening right now. But not just banks, even, the pillars of this market have been names like Reliance. Reliance is holding up today quite a bit, up about 1.5%, even TCS for that matter. But Anuj, the poster boys of the fall in the mid-cap space have been the ADAG stocks. Is there any hope there at all?
I think you just have to look at the debt and the assets. As simple as that. I think Reliance communication is now more or less gone. It's now a penny stock. I think the markets, Reliance Power as well, frankly speaking, it's done absolutely nothing ever since its listing and has been a disaster of a stock. I think the market's only hope was in two stocks, Reliance Infra and Reliance Capital. And on that, I think now you're beginning to feel as if the entire sort of this mess is going to have impact on these two companies as well, because these are the only companies, Sonia, where you have at least
strong assets,
some bit of assets. Don't know whether strong would be,
or not,
but Reliance Infra, of course, had to sell I think it's cream of its asset to Adani. So obviously there was a bit of a problem with Reliance Infra as well. So I think unless something changes dramatically, I think these stocks are really in for a bit of a slow death now.
Okay, well, for now, it doesn't look like this market is... The headline indices are in the green. Yes, has been a bit of a pop. But otherwise, the texture of this market is still quite weak. Well, we still have 1 hour to go before the day comes to an end. So let's tell you what's lined up on the show this afternoon then. The markets are choppy in trade with the mid-cap index underperforming its peers. ITC, ICICI Bank and L&T drag. But Reliance, HDFC Bank support the market. Titan is the top Nifty gainer on the back of strong Q3 numbers. And the DHFL stock recovers from morning lows after the management says that a strategic partner should be on board in the next 3 months. And we'll discuss the market fundamentals and key trends with SP Tulsian of sptulsian.com, Deepak Shenoy of Capital Mind and Mayuresh Joshi of Angel Broking. How have the Q3 earnings panned out with the market volatile in trade and failing to break the elusive 11,000 mark? What is the portfolio call? We'll ask Vineet Thodge of Mirae Asset Management. And as always, our technical experts will take you through the key trading strategies for the last hour of trade.
Okay, in fact, we have Ashwani and Mitesh joining us now for the last hour trades. Good afternoon. Ashwani, your reading of the market so far, and what are your stock calls now?
It's a ranging market, and only 5-7 stocks are taking it up. 10,950, 960, that should be it. And from there, fresh sell-off could happen. So the short covering right now could extend a bit more, but it still does not look like we are going to cross 11,000. So around 10,950 thereabouts, you could again try and go short, and possibly the market does not have enough demand at 10,800, 820. So we need to go lower where bigger demand will come in around 10,600 before we again get that 400 point rally. So this will be a mild 50, 80, 100 point rally. But broadly we are going nowhere, doing nothing, and this sort of up and down can continue for a while. And given that there are serious corporate governance concerns from companies like Vedanta, Z, then what is left? ICICI had to change CEO. So there's such a small group of stocks left that you only go with consumption, and I think these stocks will hit fresh highs maybe even before the election. Having said that, individual stocks, Walmart is a sell with a stop of 434, target of 410. Indiabulls Housing is a sell with a stop of 641, target of 620. And Aarti Industries is a buy with a stop of 1695, target of 1740.
Okay, well, thanks Ashwani for that. We have Mitesh Thakkar as well, who's joining us on Closing Bell right now. Mitesh, hi, good afternoon. What's the sense you're getting about the index itself, and what would be the stocks to look at right now?
Good afternoon. So I think the idea remains very clear that 10,980, 10,660 range remains. In the morning, I advocated buying around 10,820, which is where the intraday averages were converging. We've kind of bounced back from those levels. But at current levels, you can't be going long purely because the fact is that you've got 70, 80 points on the upside, 70, 80 points on the downside as your near-term support area. So for the timing, avoid the index. But of course, I think the RBI policy could be the trigger which could take the bank Nifty higher, and which could possibly see if the Nifty is just below 10,950 around that day. I think then we might be ready for ourselves for some kind of a breakout. For the timing, it remains a stock-specific market, and that's how we are trading. I have a buy on IGL with a stop at 289 for targets of 308, and also a buy on Kotak Bank with a stop at 1252 for targets of 1290.
All right, thanks a lot for those trading ideas. By the way, today's top open interest gainer is IGL ahead of its numbers tomorrow. 40% jump in open interest is what you have on the stock. So quite interesting on that one. We have SP Tulsian of sptulsian.com and Deepak Shinoy, founder of Capital Mind, now joining us. Good afternoon. Mr. Tulsian, I wanted your thoughts first on Eicher Motors. We haven't spoken about it through the day, but after a long time, some good news finally for Eicher Motors. I mean, in terms of the sales numbers being not that bad, which perhaps the market was fearing. Your thoughts on the stock at current levels?
Anuj, I think the January sales numbers have given a lot of comfort, because what we have seen for the December number, which was sub 60,000, was given a worry that probably we will be seeing the company to remain in the trajectory of anywhere between 60 to 65,000 vehicles per month. But having seen the numbers for January, I think they are returning back into the trajectory of 70,000 plus average for Q4, even if we take the February being the shorter month by about a couple of days. So I think that is seen to be a comforting thing. And in fact, the way it has been corrected, in fact, if you take the call on the 3-quarter average monthly sales of 75,000, then 70,000 and 65,000 was seen to be a big worry. And, December was seen to be the nail in the, the final nail in the coffin, that probably the company is returning back or going into the monthly sales of anywhere between 65 to 70,000 20,000. But January numbers have really what you call rejuvenated the monthly the hopes of the better performance to be seen in Q4 and FY20. Maybe because of the normalcy seen returning in the finance market, and maybe even the normalcy at the company's plant also. So all those things are seen to be having made positive for the company, and the price having corrected also, has made the stock to look quite reasonable.
Okay, well, Mr. Tulsian, stay on. We have Deepak Shenoy who also joins in. By the way, the market is attempting a recovery right now. Let's see if that sustains. For now, the Nifty has recovered all of its losses and has moved into the green. Deepak, hi, afternoon. On Twitter yesterday, you did mention something very interesting. You said if everyone's planning on panic selling DHFL bonds, perhaps DHFL could buy all the bonds at a discount and reduce their effective debt substantially. That, of course, sparked off a huge debate. But I'm sure you heard the call that the management had today. What's your own view on how investors should, approach the stock now? Any kind of opportunity here?
Sonia, first of all, as a disclosure, I'd first like to say this is a very risky proposition, but I'm looking at it from the perspective of a business that is has not defaulted on its loans. In fact, I know a few people who own bonds who got their monthly interest payments also today. So there isn't a default currently in progress, and there is expectations, of course, that and there's a bit of panic in the market. We're seeing bonds trade at 60 paisa to a rupee, so a 1,000 rupee face value bond going at 600 rupees, not accounting for accrued interest. So effectively, if you're looking at this company as a 1 lakh crore company with 10,000 crores of net worth, it is a systematically important NBFC. So if we look at it dispassionately and say, well, there are two choices. First, that it doesn't default, it manages to control its disbursements, and recoveries continue as they are, and they're able to pay back their loans even in the short term or the medium term. Then the recovery on both equity and debt will be swift. It will take about a year for the market to get confidence, but the recovery will happen. If the company does default, as a systematically important NBFC, RBI will have to get involved. That's the idea of being systematically important. And in the past, when RBI has gotten involved, it has forced sales and pushed at least the buyer or whatever liquidation process it has taken to make retail shareholders whole. Or retail, not shareholders, but bond holders or deposit holders whole. If that's the case, you buy your bonds at 600, become 1,000 rupees. So that's a fairly large move if they were to default also. If they were to default, the equity is worth very little. But again, the bonds see some kind of a recovery. So if you're looking at it as a risk-reward perspective, the panic in the market doesn't seem to add up with respect to the kind of commentary management has been doing and the actual actions. There's no default on interest, there's no repayment delays as well. So that gives me some kind of a view that there is perhaps something here. But of course, it's extremely risky. Things can develop. There can be more investigations, more news, more bad news that comes about. So we don't know about that. But looking at it dispassionately, I think the way the company is talking about getting about 1,500 to 2,000 crores of cash every month as repayments. They're not disbursing fresh loans. They're not raising money in the market. So a lot of their commercial paper and shorter term paper is maturing, but they're not renewing it because they're not issuing fresh bonds. They're also focusing on securitizing and generating cash from their portfolio, which is has seen one or two positive signs. They managed to sell Aadhar Housing Finance, of which DHFL only owns 10% or 9%, but it's okay. And also they've securitized one of their commercial properties for about 1,300 crores. So I believe they'll have visibility of about 24 to 25,000 crores of cash in the next 12 to 15 months, and they have repayments of about 30,000 crores in that time period. They have to do the rest, which with a strong effort I think is possible without actually raising new capital, whether it's debt or equity. So it's an interesting position. I'm not long the stock. I have exactly one bond, just for me to test the waters, but there's not much more of a position. But idea here is there is a risk reward that's building up. I think more of the as the panic, if it increases and bonds come to a 50 paisa to a rupee, I think that becomes an attractive, extremely risky but attractive proposition from a risk reward perspective.
Okay, by the way, the Bank Nifty has now moved to the high point of the day, 120 point higher, and really ICICI Bank is the one which is now leading it in terms of the recovery from the low point. That's the Nifty Bank, up about 124 points. And if you see the ICICI Bank stock, that's up about, it has cut its losses, all of them. And Kotak Mahindra Bank really has been the strongest stock over the last few days. And that once again is making the same move after testing the 50-day moving average on the way down. So looking quite interesting.